When I talk to someone in my house, I only want to say something too. So anyway, so so in the P&L, we need to have all the 12 months up to July 31st. Like for example, we can have the P&L starting from July 1st of 2019 and ending July 31st, 2020. That's the for business owner. For W-2 income, 1099, we do VOE, the written VOE, you know, 2-year income history and year-to-date income, and very detailed in the VOE, the written VOE. And lender will verify verbal verification of income, employment, not income, verbal verification of employment with the HR 10 days before closing. Okay. Today we talk about 12 months and 24-month bank statement. This is another product of alternative income, or we can call it state income. But actually, lender looking at the bank statement, they don't need. The only thing they need with the 12 months or 24-month bank statement, they need a CPA letter stating the percentage of the expenses, like 20%, 30%, actually not never 20%, 35% or 50% expenses. So that's called, that's just a letter from a CPA. And okay, I will go over with you. Why 24 months? Why 12 months? 12 months is better in terms of less work, less paperwork. But why we want 24-month bank statement? When we have 24-month bank statement, lender will offer a lower interest rate compared to a 12-month bank statement. Okay, it's a much better rates. But anyway, of course, not everybody can provide 24-month bank statement. Because when we provide the bank statement, we want to make sure the deposit amount every month is like kind of consistent and almost like the same. We don't want to turn in bank statement that's showing 1 month is 20,000, the other month is 5,000, or 1 month is 5,000, the other month is like zero balance. So it's really hard to do 24 months. Especially right now. Imagine so many business owners close their business from April or March of this year until May or June. Their business bank statement or even personal bank statement, there are not many deposits for sure, right? So it's really hard to do the 12 months or 24-month bank statement right now, because of the reason that lender doesn't see the deposit. But they average it out. I don't know if they change the guideline on averaging 12 months. Do they take away the months that the business closed? I don't know yet about it. But in the past, like for the 12-month bank statement, they look at the 12-month deposit, they average it out. That's the monthly income from the business bank account. I'm gonna go in detail. Next slide, please. So talk about personal bank statement. Let's make it 12-month personal bank statement. If we are a business owner and we turn in a 12-month personal bank statement, my team we will calculate the average deposits of the monthly, and then we average them, and that average amount we can use 100% as an income for that borrower, because this is a personal bank statement. Next slide, please. But for business bank statement, we can only use 50% of the average. Of course, we add all 12 months or 24 months deposit, and we average them, and then we take away 50%. For example, if I average 12-month bank business statement, but for example, if I look at the business bank statement and I calculate all the average of 12 months, and it's come out to be 9,000 a month, but I can actually use only 4,500 for the income to qualify for the mortgage for this particular borrower, because 50,000, 50% deducted is accounted for business expenses or business, overhead. So business bank statement, when we provide business bank statement, we get 50% deducted, unlike the personal bank statement. But there is a special scenario. Please go to the next slide, please. And if you have question, just stop me or somebody put in a chat. Must the P&L be signed by the accountant? Good question. Okay, no, the P&L had to be signed by the accountant. I tried to answer the question on the chat box. Jennifer asked. We go back to the alternative income program with the CPA and P&L. So when we submit the CPA and the P&L, the CPA or the accountant or the tax preparer have to sign the CPA letter, have to sign the P&L, and he has to put his business license on the form or the letter. And the letter will have to have the letterhead as well. Okay. I think Ying asked me if there is a way to turn in the P&L and CPA P&L without the CPA signature. Before March 17, yes. Before March 17, there is an option for the P&L to be signed by the borrower with submitting more bank statements. But right now, no. Right now, the CPA have to sign both the P&L and the CPA letter. Okay, so let me go back to the 12 months and 24-month bank statement. By the way, the 12-month and 24-month bank statement have better interest rate than the CPA and the P&L letter. Okay, they are both alternative income, but because the bank statement, you provide more documents and the lender really look into your business or your bank account closely and find out how much you really making. So they give you a better interest rate. Okay. This one, I said, if personal bank statement is the only account used. Normally, I will suggest my borrower to submit just common bank of business bank statement or just common personal bank statement, because we know everyone if they have a business, they have two different bank accounts, one for personal, one for business. But I encounter a very interesting scenario when the client submitting to us common personal bank statement, and then it's interesting when he, for some reason, he doesn't, okay, so he had two different business, but in his tax return, it only show one business, right? And that one is not even a 12-month bank statement, that's a conventional loan. Okay, now we go to conventional loan. But it's relating to bank statement guideline. So this client provided us the bank statement showing he have one business, only one business. On the tax return, he filed tax one of his business. And then that's the tax return showing business, I forgot what it is, like for example, ABC business name. And then when it comes to bank statement, he sent us a bank statement, and with the business, the bank statement have deposit from locksmith business, and look like he worked for locksmith as some kind of like 1099 earner or something, but that income doesn't show in his tax return, but the income he earns show on his personal bank account. So, but that the, and that's somehow that bank statement, that's the only asset, the money that he have in his bank account. And when we need the money to use for the transaction, lender said, in order for you to use the money you earn from locksmith, you have to show that you earn income from locksmith, because the tax return doesn't show. You have to show you have a business account or some kind of to prove to us you are a business owner, or some kind of you have to prove to lender that you earn this income from locksmith. But I don't know how that person doesn't have the business bank statement for locksmith and he doesn't file tax. So in that case, lenders say, if you don't have, you can prove to us you earn the business, you working for that business, then you cannot use the bank account, the money. You cannot use that money to close for fund to close the transaction. If you have, if you can prove to us you work there, okay, if you can prove that you work there, you earn that income, then, but because you only have one personal bank account, not personal and business. So we also, even this is personal bank account, we can only use 50% of the average deposit or the deposit, because this is a business, but you don't have the business account. So any business have business expenses or business overhead, but you don't have the business account and you only have the personal account, you can only use 50% of your deposit, whatever. Uh, it's very different. I mean, I bring in a different scenario because normally we people have two accounts, business and personal. But what if somebody doing business but doesn't have business account, but only have personal account? Then we also have to take away 50% from the average deposit as in a business expenses. I hope I don't confuse you. I try to bring this in to let you know, if your client happen to have only personal bank account, even though they have their own business, that's how it's happening. Okay. So I hope I don't confuse you. Okay. Next slide, please. Do we have another questions? Yes. If the loan is for purchasing a rental property, how is the rental income accounted for? Good questions. The lender will, okay, if you buying a rental property, lender will ask, will require the 1007, it's a rent schedule form when we order appraisal. So if a single family home, normally we order a form 1004 for appraisal report. But if this is a rental property, lender will require another form, 1007. So there are two forms in the appraisal report, 1004 and 1007. The 1004 will tell the lender the home value of the property, but the 1007 will tell the lender how much the rental income is for this particular property. So that the 1007 we call rent schedule, and the appraiser will go and find out the market rent and suggest the rental income for the property, and we can use it for a refinance. For a refinance, if we don't do a 1007 rent schedule, because people don't want to do it, it costs money. Lender will do their own study. They find out what is the market rent for the property, and they use that rental income in our application for to help the borrower with the income. Okay. All right, so the next one we talk about self-employed during COVID-19. So I jump again. So I was done with the 12-month and 24-month bank statement. I just go briefly on how to calculate income for 12 months and 24 months for personal bank statement and business bank statement. Now I go back to our conventional loan, because we do mostly conventional loan at Pacific Y. We've been doing conventional loan since day one, and our business volume is like 95%. We do conventional loan, jumbo loan, 5% to 10% alternative income and no docs. So it's kind of funny. People think that I I only do stated income and no docs. So when they come to me, they expect me to be able to do everything, even they not qualified, and they think I have a magic wand and I can make every loan works, but it's not that case. I do have stated income. I do have alternative loan products. I do have jumbo loan. Do have no doc loan. I have IT products. People who have no social security number, I have loan products for them. I have loan for foreigner. I have loan for everything. I have all kind of loan products. But mainly we do conventional. And okay, so talking about self-employed, because of what happening right now, a lot of business are not opening or not really operating. So lender is trying to be very careful when they underwrite um, a business owner loan. There is one lender, very funny. I just found out yesterday. For self-employed, the interest rate is a lot higher. Just one lender, not everyone. I was like, what? Why do you do that to self-employed people, business owner? And that's happened. One lender. And of course, we don't send loan to that lender for self-employed. It costs too much. So anyway, they just try to prevent. So that lender, that particular lender, try to not approve loan for business owner. So when they increase the interest rate, there's a reason. They don't want to take in any loan that the borrower is business owner. So they don't have to spend time working on them. So when like loan agent or broker look at the interest rate they offer for business owner, they say, I'm not gonna submit this loan to you because you guys charging so much for business owner. That's it. We don't turn in any business owner loan to that lender because that lender doesn't want any loan that the borrower is business owner. They are scared. Okay. So these four items right here, I copy and paste from a loan approval. And I'm not sure you recognize it. It is your client loan. This is a jumbo loan, by the way. So the first condition is, Mr. Ramos, would you like to read the first one for me?
Verification of employment
The
for
complete.
self-employed borrowers within 10 days prior to note date. And the following is required to verify 2-year history of employment, open and active.
Thank you, Mr. Ramos. So always, of course, we always need the verbal VOE, verbal verification of employment. 10 days prior to note date means closing date, okay? So before, actually this happened right before they draw the loan docs. So before lender, you know the process, right? When the loan have no clear with all condition approval, with normally the loan was approved with condition, and then we will satisfy lender with all the condition they ask for, and we get a loan approval with no condition. That means after we satisfy all the condition, we have final approval or no condition, no more. And when we have final approval, lender we issue a closing disclosure, and when the client sign the closing disclosure, um, 3 days later the client can sign the loan. Okay, so during like after the client signed the closing disclosure, we call it clear to close, meaning we ready to order docs. And when we ready to order docs at that time, lender will call the employer, the HR company, the HR of the company, HR of the borrower, and verify verbally with the HR about the borrower. You know, like, is this borrower will continue working in, or he's still working? He's still actively working? Those kind of questions to make sure that the borrower is still working there. So that happened. Uh, but for self-employed, I think mostly they call the accountant or the CPA.
Yeah. Ready?
Okay, and So they also ask about if this this business is open 2 or more years. So they kind of find out the history of the business. Okay, so that's the first one, verbal VOE. The second, Yan Vũ, can you read me the second one?
Yeah, LOE from the borrowers to state businesses is still open, active, and viable with no intention of closing or disruption of business and income.
Thank you, Ji. And then lender require, actually not asking, the borrower to write a letter stating that my business is still open, my business is active, and there is no intention of closing or disruption or on a business and income. I know you say, okay, anybody can write this letter, but they ask the borrower to write that letter to confirm the business is not going to be disrupted or closing. Why? Why is that? To me, I think so. Later on, the borrower should not have any excuses for not making the payment. That's what I'm thinking. But everything should be on paper, right? And the third item is business license. Lender only asks for 2 years of business license. Why? Because every business needs to be running for at least 2 years or more. So if the business owner can provide 2 years of business license, meaning that this business is in business for more than 2 years, right? The last one, who can read it for me? Can somebody volunteer?
I'll read it for you.
Thank you, Ji.
Yeah, provide evidence of current work, executed contracts or signed invoices that indicate the business is operating or evidence of current business receipts within 10 days of the note date.
Thank you, Ji.
You're welcome.
So, yeah, so you see, they even ask for evidence of current business receipts. So
Wow.
just 10 days before closing. So normally when you sign your loan doc, your loan should close in like within 3 to 5 days. So when do they ask for this? They ask for this like before they draw docs. So like this condition will have to be satisfied prior to doc condition, meaning you will have to submit this before lender will give you the final approval. Final approval meaning when there is no other condition in the approval. That's it, no more condition. So we will need to provide evidence of current business receipts or contract. So if somebody for business that they use contract, they have to provide contract, okay, with signature on it for sure.
How many do they want?
Just one, as long as it within the like very recent, like
Mhm.
like today, if I get this condition, I should show them this either a signed contract like last week or within 30 days, something that very recent. Or for talking about receipt, even the receipt, like if it's a nail salon, hair salon,
Mhm.
if I have to turn in the condition today, they should give me the receipts over the weekend or just yesterday.
Wow.
Something had to be very, very current, had to be very recent. So lender know that this business is working and they do earn income during this time. This condition, we did not see this condition before at all, but we do see it now because
Things change
lender
a
want
lot.
to make sure. Yeah.
So, Minh Chau, I have a question.
Yes.
Regarding my client, he's a chiropractor. So, chiropractor, they have a contract with insurance, right? So the client, when they come there, who under the insurance, that's where my client receive the payment from the insurance directly, rather than from the client that my borrower serve. So in this case, can you give me some concrete example how we can obtain the evidence for this purpose?
So you're saying that your client have to bill the insurance company, right?
Yeah.
Okay. I really don't know how it works, but I'm guessing when the client, if the chiropractor bill the insurance company, there must be some kind of records. See, so they don't receive the money right away, but they bill the insurance company. We should be able to get some kind of evidence showing on this day I got this many clients and I bill the bill to my insurance company, or I and a lot of time when we go to see a chiropractor or a doctor, we have to pay, what is it, co-payment, right? Or
Copay.
yeah, copay. We have to show that, okay, beside the copay, the rest of the payment was billed to the insurance company. So somehow you have to be able to prove to lender, this is no there is no certain rule, but when we do condition, good question, Anda, by the way, when we do condition, we make sure we think the way the lender think. They don't see our client, they don't even talk to us. You as loan agent, they don't talk to you, they don't talk to your client, but they want to know everything black and white and on a piece of paper. So when you submit condition, you just think like, okay, if I am the underwriter, how do I see this? I see this easily because I talk to my client. I understand my client. I trust my client because they are good people. But my lender, the underwriter, they sit in a cubicle. They never see my client. They never see me. They never talk to one of us. And of course, there is no trust relationship, but everything had to be written on paper or evidence on paper. So you have to find a way to prove to lender this is what happening on paper. So keep that in mind. So when you take care of condition, think for the underwriter who sit on their own in their own cubicle, don't know you, don't know your client, but want to know the truth about what happening. Find a way to prove everything. Okay, I need to answer a question in here. Okay, do you do personal loan? What do you mean, and Dan? I don't do personal. What do you mean personal loan? And then can you speak up?
Interest. I do 10% interest. Just kidding.
So
I'm just
Anda,
asking you, say you do everything to help people, so people need help, need personal loan.
I see what you're saying. You know what, Anda? Okay, Anda is my lender. She do personal loan. Yay.
Okay.
And we can work out the interest rate, okay?
Okay.
All right, that's a joke. Okay, that's good.
I know, but I
Alright.
think
GMC.
yes.
Oh, so back to the Andao question. Like I think the chiropractor office. They usually they when the chiropractor see patient, right? So they pay the like the billing department somehow to bill the insurance each month. So I think they have the record, and then they can submit to the lender. That's this is my income for this month, because like the billing department, they should have all the information.
Thank you, Anda. Thank you.
Okay, thank you.
Thank you so much. Yeah, we have the professional. Okay, and Jennifer have another question. Is number 4 a funding condition? Hi, Jennifer. The number 4 on the screen is not a funding condition. It's a prior to loan docs condition. So we have to provide this before this loan is clear to close. Christy, I think I understand your question. She asked about private lender. Yes, we have private lender. But the private lender that we offer, they only let you borrow a loan for 12 months or 18 months, or the maximum is 24 months. And that means, for example, if I create, I offer you a loan, you want your client buy a home this month. This month is August. So August, so let's see, 12 months would be September, October, November, December, January, February, March, April, May, June, July, and August. So August next year, you have to pay off the loan if it's a 12 months. If it's 18 months, so you have another 16 months, but you have to pay off the private loan in short term. There is no 5-year fix or 30-year fix. Private lending, they don't offer that. So we do have a private lender. We call no doc loan. That loan we don't need anything. We just need to run credit report, and of course we need the money to close, but we don't even need paper trail. So it doesn't matter how many deposit. For private lender, they don't care. As long as you have the money from your bank account for the down payment at closing, they don't care how much do you just deposit. Whatever you deposit doesn't matter. But you have to give me the bank statement so I know for sure you have the down payment. And the minimum down payment for private lender right now is 35%. 35% down payment for private lender. And normally we require like 600 FICO score, 600 middle credit score. If the client have lower than 600, we'll talk to the client about it, and the lender might go like, you need to put in like 50% down payment instead of 35% with your FICO score. And remember, when we lend our client that kind of loan, we make sure that the borrower has an exit strategy, meaning 12 months later, they must be able to get a loan on themselves. I mean, they must be able to refinance using their own income or going with a stated income loan products. Okay, let me give you an example. I have a client who has everything, good income, good credit score. And then when it happened, this client want to buy a home, but the only problem is the down payment, because they have so many deposit in the bank account that we cannot paper trail. So there is no other option. We can even do stated income, because even stated income, you cannot do like so much deposit. So there was the only option with that loan. We have to do private lender. So because we try to use the money from the bank statement, but of course 5 months later we refinance for that client to get a good loan for them again. So the private lender loan is a good loan for a certain scenario, like when you flip house, when you buy a house to fix it up and you sell it within 6 months, then that's a good loan, because you don't, it's quick money.
Yeah, quick money.
Yeah.
That's
But
it.
not for everyone. It's expensive. Yeah. Yes.
What is the interest rate for the private lender?
About 9% or 9.5%.
Oh,
But the client only pay interest only. Remember this. So the monthly payment is very low. Interest only for 9%. For
So
12
you
months.
have a bridge loan? Do you have a bridge loan just for 12 months?
That's
for
called,
someone who has like back to back sell.
that's a bridge loan. The private lender is lending a bridge loan.
It's
That's
a
what we
bridge
talk
loan.
about.
Okay. So this one, they cannot apply for the scenario like the client only have 10% down because
No.
they are waiting for the equity from the other loan, the other house. They cannot use it?
No, and now, when you have down payment, there is no way to go with bridge loan or stated income. Remember, stated income minimum requirement is 30% down. So for your client who planning to sell a home and buy another home, but right now they find something they love, they want to buy right away, but they don't have enough down payment. On that case, the best way to go and down, if it's a conventional loan, do a low down payment if they still qualify for a mortgage. With like 90% loan to value, 10% down, if they qualify for a mortgage, do it. Or if they not qualify with 10% down, they have to have 20% down, then you know what? Get 10% gift from the relative. Gift fund. That's the cheapest way and the easiest way to go about. Okay?
Thank you.
Okay, thank you. And any more question, or we go to the next slide, please? Good job, everyone. You asked a lot of questions. I like it because a lot of time I don't know what to say. All right. Okay. So we also do foreign national loan. Okay. For foreign national, like people live in Vietnam or Philippines or China, they want to buy a home here. We do offer them a mortgage and also 30% down payment. If it's a salary borrower, like they earn income for working, then we will need a written verification of employment. We will provide the form, the written verification of employment form, and they will ask their company to fill out that form, of course, in English. All right. And if it's a self-employed borrower from a different country, we want a CPA in US to write a CPA letter and to do a P&L for them. Of course, they have to provide a document for our CPA here in the US to do all that work. So the CPA here in the US can state it in the letter that he reviewed the income of the business owner the last 2 years or 3 years. The CPA doesn't need to be the one who do the tax, to prepare the tax for the business owner in another country. All he needs to state in there is, I review this borrower business income the last 2 years. That's it. And of course, they have to say this borrower name, like William business, and who own 100% of the business. And I reviewed this business income for 2 years.
Yeah. Daniel Jean call you. Okay.
Somebody.
Oh shoot, I'm not muted. Dang.
Okay. I'm not there yet. Can you go back to the slide? So, and then any document that come from a different country has to be translated. For example, bank account. Bank statement had to be translated and by a certified translator and notarized. I think this costs like $400 or $500. I don't know who do it, but in the past I did it, and my client had to pay. I have a transaction, and my client had to pay $400 for this, for someone to translate it and notarize the document. And besides, we need a passport and a valid visa, if there is a visa, from the borrower. And the borrower had to have the US bank account. That means they have to be in the US at some point, creating their own bank account here. Why? Because after closing, after the loan is complete, right, every month, lender will withdraw the money directly from the US bank account, the bank account in the US, right? The monthly payment. Because lender not gonna wait for the foreigner to send a check to make the payment. Every foreign national loan, the payment will be automatically withdraw from the borrower bank account. So the borrower have to have the bank account in the US. And another requirement is the client has to have a mailing address in the US, because lender need to be able to send things to the borrower at some point, and they cannot send the letter to another country. They don't want to do that. They send the letter to the address in the US. So normally your borrower has some relatives in the US. They come here to visit you or something, and they decide to buy a home here, and they can use your home address at their mailing address, but they have to go to the bank and open their bank account. Foreign national loan is a very easy loan, very, very easy. So if you know anyone who need to buy a home in the US, only 30% down payment is the requirement, and submit everything list over here. We can do the loan for them. Okay. All right. Next slide, please. We should be done soon. I'm go over time already. Non-arm length transaction. You might heard of this so many times. What is non-arm's length? It's kind of weird with the name. It is like when a buyer and the seller have a relationship, any type of relationships. It can be sister and brother, it can be uncle, niece, nephew, whatever it is. There's a relationship or business affiliation. So seller and buyer can be, you know, in some kind of business affiliation relationship that called non-arm's length transaction. Okay. So non-arm's length transaction allow on all occupancy for existing property types. I always have this kind of transaction. Like right now, I have a transaction where the uncle and a niece, they own the property. Now they sell the property to one of the niece, like, so that's a non-arm's length transaction, and lender allowed it. And you know, one advantage of non-arm's length transaction is, I done this so many times. The seller can give the buyer the down payment using the equity of the property. So, okay, let make it easier to understand. Right now, I have the transaction I just talked about. So the sale price is 700,000, okay? And the client have 100,000 in the bank account. And the seller is the uncle who said, I'm gonna give my niece, the buyer, 90,000 for the down payment. So the borrower have 100,000 from her bank account and 90,000 equity, gift of equity from the seller, and the seller is the uncle. So they have 190,000 for down payment to buy that 700,000 home. The uncle doesn't really pull 90,000 from his pocket because that 90,000 is the equity of the home. Right now, the home value is 700,000 and the loan amount in the home is only 300,000. So the uncle have 400,000 equity. He gives the niece only 90,000 from his 400,000 equity for down payment. In this case, the niece have a lot of money for down payment. Is it awesome? I love to do this kind of transaction. You as an agent, you can help your client with this type of transaction, because a lot of time they come to you and they say, I want to buy a house for my aunt, but I don't have enough down payment. And this is where you come in and advise. They will appreciate it because they did not know there's such a thing. Because whenever we buying a home, we think we need to have money for down payment. But in this case, when somebody buying a home from a relatives, they don't have to have the down payment really. They can even, if it's normally this kind of transaction is the buyer is buying a home for owner occupied. So you can have 100% gift from the seller.
Question, MC?
Yes.
How do you go about executing that? Are you gonna like refi cash out of the uncle's home?
No, you do a purchase loan transaction.
So how is that incorporated in the purchase transaction?
Okay, I just do a purchase loan, just very normal purchase loan. I do so many of this. There's one of transaction. Let's make another example. They come to me. The mom sell the house to the daughter, right? And the daughter has no down payment. Even there no money for closing. The mom give the daughter 20% down payment and also all the closing costs from the equity of the home. So what happened is nobody bring in money because the home have equity.
How does a lender do that?
The lender, they do just like normal loan, but just no money bringing in. But at the end, the closing, for example, let make a simple example. 500,000 home value. Mom give daughter 100,000 down payment, 20%, right? So she loaned 400,000, right? So the daughter doesn't bring in that 100,000, but she gonna get a loan 400,000 at closing. The seller, the mom's supposed to get 500,000 for selling her home 500,000. Is that correct? But lender only cut a check 400,000 to her because she gave away 100,000 to her daughter already. You see what I'm saying? The lender, the lender get that one. You know, the 500,000 home value, but 100,000 giveaway. To lender, this borrower already down 100,000. Because the equity 100,000 always there in the home. The lender still fund 400,000 as a loan, but and that seller will only get 400,000 because she gave away that 100,000 already. She doesn't get 500,000. Normally, when you sell home 500, you get 500. Is that correct? I'm not talking about taking away all the closing costs. I'm talking about simple way. When you sell home 500,000, you should get 500,000 after you sell it, after closing. But in this case, because you give away 100,000 to the buyer, you only bring home 400.
Oh, the mom sell the house to the daughter.
Yes.
Oh, okay, okay.
You bring home 400,000 instead of 500 because she gave that 100,000 to her already.
I see, I see.
I have a question, Jamesy.
Yes.
Why did the mom didn't reduce the price of the home so that the loan amount would be smaller? Why she, instead of giving the equity away, she can reduce the price and then get a smaller loan amount?
Good question. Very good question, Hera. Normally, those transactions, the purchase price is way lower than the market price. Okay. Like the transaction I'm doing right now, 700,000 purchase price, but the market price is like 850. Okay. And why they still have to give fund the gift for the buyer for down payment? Because every purchase transaction, there must be a down payment for lender to lend you a loan. And that's why the buyer will need, if the buyer doesn't have the down payment, the seller, in this case, the mom or the uncle, have to give the daughter the down payment from the equity of the home.
Yes.
Am I answering your question?
Yeah. So that's mean the price already low already.
Yes.
Okay.
Yes.
So that's
right.
clear. Okay.
Yes.
Thank you.
I did, like a few months ago. I help my past client to so his home value is a lot higher, and then he sell it at a very low price because he don't want to pay, because he doesn't want to pay the difference in capital tax gain. So he sell it to, like a brother sell a home to a brother. So he sell it at a very, very low price. And also the same way, he also give up equity. So people do all kind of things, but they are all legal. Okay, legal. Then they still approve those loans. Okay. So continuing on non-arm's length transaction. So this transaction, that you cannot do a new home loan, meaning when you buy a new home, like for example, I am building a new home by myself. I build a new home and I sell it to my brother. That's not gonna happen because this non-arm's length transaction doesn't allow new home. Okay, so not happen. Okay. Not permitted on delaying financing. So on the last item, non-arm's length transaction are not permitted on delay financing. What is delay financing? Delay financing happen when, for example, someone have a lot of cash and they go out and they buy a home all cash, like $1 million home, all cash. And then 6 months later, they feel like, oh, I need, but because they buy with all cash, they ran out of money. They spend $1 million buying $1 million home. 6 months later, they need cash to do something, to open a new business or something. they call us and say, I want to do refinance cash out because right now I have a home of $1 million, all equity. I want to cash out 200,000. That's easy, right? And in that case, when the client buy a home with cash and then 6 months or more later, like a year later, they want to refinance cash out, it's called delay financing. Delay. That means they know you cash just to get the home. A lot of time when the market is so hot, when it's the seller market, buyer will go buy a property paying all cash to tell the seller, I'm gonna buy it quick and fast, so the seller will like it and sell it to the buyer right away. Cash offer is only, you know, at the number one on the priority list, so the seller sell the home with all cash. The buyer use the cash to buy the home because of the market is so hot, and then planning in his head, I'm gonna refinance cash out later. So it's called delay financing. Okay, so there's a name, delay financing. So if I'm buying a home for my brother, okay, an old existing home, I buy a home from him, 500,000 cash. 6 months later, I want to go to the lender and I want to refinance cash out. Lender won't allow because they go back. 6 months ago, you buy all cash, but you buy it from your brother. Now you want to refinance cash out. I'm not gonna let you do it. Somebody's just singing. Anyway, so I think, is that the last slide, Hera?
What's the reason, MC, that they won't allow it?
They just don't allow non-arm lengths. I think they just, I don't know. They have their own reason. I don't know, but they don't allow. Yes. Really?
Just curious.
Yeah.
Our life of the loan.
A lot of loan product they don't allow non-arm lengths though.
Okay.
So can you somebody read me this brain food of the day? Someone?
Can't see it.
Go ahead.
Okay, I'll read it. Brain food of the day. If you want something you never had, then you've got to do something you've never done.
Thank you, Taylor. That's awesome, right? Is that right?
Yeah.
So if I never had work, now I have to work?
Yes, you should, Jay Vân Anh.
Oh, be quiet.
At 7:30, okay? You never done it before.
Thank you for training.
Thank you, MC.
Thank you so much, everyone. Anyway, yes, do something different today, everyone.
We gotta mute and down next time.
Okay, try it, Jay.
Bye.
Hello, bye-bye, everyone. Oh, I said some chat. Okay.
Okay, see you tomorrow, guys.
See
Thanks,
you
MC.
tomorrow.
Bye.
At 8:30 or 8.
Thank you, everybody, for joining today's training. And thank you so much for all your questions. You are so awesome. And yes, do something different today. So we have a different result next week or next month or next year.
Okay,
Love you
Vân
all.
Anh.
See you
Go
soon.
to
Bye.
Yes,
wake up
ma'am.
tomorrow. We see you at 7:30 at the office, okay?
See you tomorrow. Yes.
Okay, bye, guys.
Yeah, right.